Welcome to TradeTheNBI.com. This is John. This report is for the 11th of January and ending the week here. Well, on Thursday, we had an interesting setup here where we were right at the 50, close to slightly above it from the Wednesday. So we came back down to it, tested the 50 again. And what was interesting is we were looking at this configuration, which somewhat bearish, but within the context of our shakeout, you can see anytime you have that yellow line riding above the magenta, you're still within the trend. Now, that's starting to roll over and narrow means you're potentially close to it. So the fact that we're hitting up against the 26, you're going to need that to turn around, sort of like here where it ebbed and then rolled back up. But you've got this definitely weaker setup. Now, what it can produce, and what we typically see is like this, where you get a P2 pivot, and then it does it again, and then creates additional higher pivots, which becomes a positive. But you're facing some headwinds because you've lost your short-term buyers, mid-term as well, and even long-term fading slightly. You just don't have any real short activity that's driving to push this down at this particular moment. Doesn't mean it isn't building in there. Same situation in the NASDAQ, it looks identical. And I always find it very critical as we reach this point where you're about to go positive. We talked about it the last time it happened, which was over here. We peaked out right at that 50, and then it started to roll over, and as soon as it does, that's the point where it starts to take that ugly bend. The euro has been a fantastic help, though, to propelling the market from falling apart, and as long as that continues, it's going to help. Doesn't mean it'll be enough to completely stop it, but again, that 26 is going to be that point where they really have to get over, because that's that algo activity from that top side level. Here from gold, again, now we're starting to be right back at the same highs, a little bit lower shakeout, but still well above that plus 15. And like I talk about at that point, you got to see that DOC dip below the red before you're going to face any kind of significant pullback setup into it. So this was the 5K. I thought it was fun to show you. This is the adjustments that are being made on the paint bar. The Diocon Paint 2 is what this really is called right now. But essentially it's taking into account what we would refer to as a big bull versus a big bear, meaning bullish run where either cyan is completely below red, coupled with shakeout yellow line here being above the zero line, and then converts when that goes under. Now the problem with that can be like over here, where you just get the tiniest of retraces into it while you have bearish configuration. The reason this one didn't trigger the magenta line sooner, as you might have seen in other ones, is the rising gold, which typically we see though at the tops, and that usually leads to a return back to the highs. Just from the programming standpoint though, as soon as it's no longer rising, it makes it subject to an opening, so there'll be additional conditions that will fit within that one. But this isn't often a normal situation where you get a little bit of a fade off from the peak, and then it'll come up and make that lower shakeout. In this case, it made a lower one. You would think that this one would be fairly attractive from that standpoint, except for you never really had a red DOC above zero. Once that DOC gets above zero and then starts to break down, that becomes a much more powerful lower leg, and that's where later on when signals, we're currently in a similar situation again here as we've made lower setups, and you can see that yellow line for the shakeout is below the zero. So it's an evolution from a 50K, similar concept. So this way it's able to capture very good sized runs, and then when the market gets weaker, you just stay within the weak trend until it shows signals. And typically we pay more attention to the P2 pivots as shakeout is rising, and you have your yellow above magenta. That's usually the way that crossover works. So it's getting to be very tight, very effective. Looks good. What it's going to miss is some of the things that we look at here. Now, so here's what we were talking about, where we ended up with gold coming through here, and then this is obviously blue, right where it was then showing a little bit of a pink dot in the same 5K, and that then produced the return. Now, of course, we still have some positive extremes that need to be filled back in, and those go all the way down to the 80 level. So there's still potential that you retrace to there. Now, but as long as you're above this 2569.50, that's positive because you're above the daily 50% line. That's why I colored it green right there for a visual. But even still, we had some excellent runs. We had the beautiful spike up that took place here. Quite a few positive extremes going all the way through. It filled all the way to the second one, which is right down there at the 73, not the first one. And that happens a lot when you get the initial breakout, that very first positive extreme can take a little bit longer, and it's right at the 50 is interestingly going to be an interesting power play. What we saw was after a decline right below it, we were trading quite a bit right back and forth at it, and we had a what I call the key reversal point right here, where this one dipped, and as it came down, it did not go below the red line, so it was starting within a very clean short configuration, and then immediately turned around within the next bar, just like that, and it was pretty clear that started the positive extreme run, and that led to the big move, which retraced most of the way. So there were some excellent, both long and short configurations within this setup. But this is what I'm talking about when we reach above the zero with the DOC red, and very difficult to want to short any of that, particularly when you're above the 76%, and it pretty much holds all the way across on that until you do finally get the breakdown, which fully develops right there at the complete drop of the low, or as I like to talk about, the continued breakdown of lower shakeouts, and then it's just a matter of dropping below the magenta with the histogram. And that happens, well, even further back. You would probably get one or so right in between here before the final pop. So this becomes one of those where I'm going to have a more conservative approach on the trade side of it, so that you're able to capture the biggest moves there, and worst case, you can then rely on breaks at the ABM as it's going to be trailing them. But I just want to point out the significance of those crosses so that you can decide when looking at it. It's like, okay, hey, if I'm above the 7.5 and I dip below, yes, I'm likely to get a retrace, but more likely it's only going to be to a support level, this particular case, the 76, unless you get a continual drop of that continues straight down. You'll get some that come up like this and then just go straight down. In this case, it didn't. So you know, hey, I'm going to face some additional pressure until that happens. And once it did, you can see. Then you start going to the main key supports and or filling positive extremes. So all in all, good stuff. Love to point it out. It just shows the dynamic nature of things, and I think that it's only going to make it more easy, because next I'm going to be adding to those signals will be what would effectively be a stop. So even if the signals return bullish, this one will stay red until it is beaten by a stop. And we normally look at those stops as what you see from the ABM resets, which are usually a couple of times ATR. So in this particular case, you may have a 6 to 8 point stop. So from 93, you would be just over 2,600. So it would have to move over 2,600 before this would change from being red. What was the high? Let me look exactly what that high was. 2597. In this case, it's 2599. Still would have been below it. So this return, so this would have started at red. It would stay red because you'd still be in that trade, and then it would follow ABM protocols with trailing stops, that kind of setup. So all in all, hope everyone has a great rest of the weekend, and I'll continue to plug this away. And if I get to a point where it looks rather strong. I'll just go ahead and send it out to you guys, and you can take a look at it and do some investigative work. It's really been designed specifically for the 50K at this particular point, so that it will adjust to the Opus strategies. And then I think I'll do a refined version for the 5K, and we'll just delineate them, because within the 5K, you can attack some of the moves where you're slightly higher in these ranges, simply because you get a little bit more flexibility in the 5K with dips and stuff. So you may end up with a short dip, and it turns around, but hey, that can be 3-4 points, and from a day trading standpoint, if you really want to take those, it's certainly reasonable to capture a lot more moves in between. So that's the genesis or the nature of where my thoughts are on how those work. And I think it's all good. It's looking fantastic, though. As always, though, trade well, and I'll put up various charts as things change, and you can see how it evolves that way. Trade well. We'll talk to you later.